Gold prices coming under selling pressure. Why? Why? Because yields in the United States, yields globally have been rising. It's a bit of a crisis at the moment. If you look here, the 10-year yield jumping to its highest levels there we've seen in almost 2 years, 4.75%. But the 30-year yield jumping up to the highest levels in 19 years. What does this even mean? Why does it weigh on gold? It weighs on gold because guys, naturally, when borrowing costs, yields rise, so on and so forth, that weighs on the precious metal of gold. We get capital rotation out from gold into bonds. But it's not to say people are going to be flocking to the US bonds because there's fears of stagflation in the United States as well, which is shaking up making investors a little bit nervy. But with this bond market yields driving up globally. It's not just in the US. Yields are going up globally. We get naturally get capital rotation on those economic fears, capital rotation out from gold and into treasuries. So bonds, government bonds. Now, see, we called those shorts there yesterday. As I said, gold ran into a heavy area of supply here. Big rejection, big rejection and downside pressure. Obviously, why we had those shorts, equal highs, potential double top, neckline area of liquidity here. And we came out of these shorts just in a run up to this zone. Just an element of caution because obviously this is a big zone. Now, if you look at price action at the moment, we've got lower highs, lower lows. If we want to continue to the downside, obviously, you know what we need to do. Where I'd feel, confident in resuming shorts would be breaking out, retesting, and then dropping to that next area of liquidity. Now, just keep in mind that we won't always retest because this is a significant area where people are running longs, where people be trailing and placing stops. So there'll be a lot of orders here, a lot of orders, which if we break out to the downside, could see stops being triggered to the south. So it really exacerbate that move lower, a breakout, retest, and then drop. Okay, so this is very possible. So just make it very clear, it's very possible that gold and dollar both fall because dollar is suffering, right? Dollar is suffering because of the economic slowdown, fears of stagflation, while gold is also crippling on sort of stagflation fears globally. But then obviously with bond yields rising, you get capital rotation out from gold into treasuries. So yeah, it's not a good time for gold right now. It's not to say that the bull market can't return, and it's not to say that we can't bounce here, if markets do decide to want to buy the precious metal. But I'm just saying right now, as it stands, with this big rejection, with the structure at the moment, okay, we don't try and catch a falling knife. With the structure at the moment, it still looks bearish until there are signs of stabilization. Like, for example, we get this reversal candlestick, we get a big bullish engulfing, then I'd be like, okay, now we can resume to the upside. But vulnerabilities remain right now at a precious metal. I've got various playbooks that I'm looking at to how I capitalize on this. Obviously, we capitalize on this upside move, we capitalize on this downside move. We got the playbook. So if you want these playbooks, if you want to be able to grow and learn and understand how to trade all these macros and technicals, I put them all in simple frameworks. Check out via the links below. Check out the resources via the links below. If you have any questions, hit me up. Stay lit, stay blessed, and I'll catch you on next update, baby.